Everyone, and welcome back to Global Education Zone. And today we are going to be talking about tax and value-added tax. Now, in different countries, we have where people pay tax, and this tax is paid as an amount of rate on the money they earn. And we even have a system known as Payee, Payee. So that is also the abbreviation for pay as you earn. Now, in this system, people pay an amount based on the rate of their income. Now, how do you calculate and that's such amount, and what if there's a non-taxable income, and then how do you calculate the amount of tax? So we are going to be talking about those in this video, and stick to the end so that you can gain as much as possible. Now I will be explaining this in examples. So in the first example, I will describe a system, an imaginary government. So where in this government the people pay they pay a tax rate of 10% on the first 40,000 units of their income. So I won't talk about currency now, just units. The first 40,000 units, yeah, the first 40,000 units of their of their income, or let's call it the first 400,000 units, they pay 10% tax, and then on the rest they pay 20%. So the first 400,000 you pay 10% tax. Then on the remaining amount of the income you will pay 20%. So what this means that anyone who earns less than 400,000 will pay a uniform rate of 10%. But anyone who earns more than 400,000 units will pay a 10% tax on the first 400,000, and then 20% on the remaining amount of his income, his or her income. So now let's give an example. After claiming all the possible allowances, the taxable income of a worker is 434,800. So this means that after he has claimed his allowances, this is not the complete salary or the income. So non-taxable income or the non-taxable income is the or maybe the one that is tax-free. So this tax-free income, you can't tax them. So after you've deducted that, so your tax can only be paid on your taxable income. So now this amount is this taxable income here is 434,800 units, or let's use naira, 434,800 naira. Now they said use the method, that's one I described earlier, to calculate the income tax payable. So you are trying to calculate the tax basically. Now we said that in the first 400,000 naira you'll be paying 10% tax rate, and then on the remaining amount you'll pay 20%. So simply your total tax T will be calculated as 10%, that's 10 over 100 of the first 400,000, that's times 400,000 naira, then plus 20% over 100, 20% of 20% times the remaining, and the remaining, when you subtract 400,000 from 434,800, you get 34,800. Let's do the subtraction. So when we do this, the tax payable on the 400,000 will be 40,000, plus the tax payable on the 34,800 will be 6,900. So when we add 40,000 plus 6,900, we have a total of 46,900 naira. That shows that on 434,800 naira, he is paying 46,900 as tax. That is one approach to this question, and there are different methods, but this is the easiest method you can use. Now let's move to another question and another example. Now a married executive's annual salary is 1,868,760 naira. Sorry, 720 naira. He has 5 children, 3 of whom are under 16. He claims 38,500 for a dependent relative and 11,240 naira for life insurance premiums. Calculate his annual taxable income. So now this annual taxable income is the amount of tax you will pay annually. Now next we are going to calculate the monthly payee income tax. Now this okay, let's just look for the annual taxable income in this question. Now in this case, the allowances are paid for 3 children only. So on this on his 5 children, only 3 will be paid. Only 3 will be under the non-taxable income because they are under 16 years. So that means we are going to calculate the amount of money money that will be exempted from tax. So let's calculate everything together. So he's married, so his allowances will be, for personal allowances, he will have 333,950. Sorry, 590 naira. Then next, for his spouse allowance, he has 50,000 naira. Then for his children, he has 40,000 naira for each of them as an allowance. So the total allowance will be 120,000. Then next we have for the dependent relative, he has 38,500. The next we have the insurance allowance is 11,240. Now this is the total allowance is 553 naira. Sorry, 553,330 naira. Now these allowances, I will explain that these allowances, they are the total income, they are total proportion of the income that cannot be taxed. So if you are looking for the amount of the proportion of the income that will be taxed, you subtract the non-taxable income from the total income. So the taxable income is equals the total income minus the non-taxable income. And this non-taxable income, they are still the same thing as the allowances here. So when you subtract that, taxable income equals 1,315,390. Now this is the taxable income. Now this is what we'll be calculating, and we've just done that now. Now if we were to use the same method, the second part of the question says we have to look for his monthly payee, that's pay as you earn, Payee abbreviation, his monthly payee income tax. Now if we were to look for the income tax on this is 1,315,390. Using the same method, we will say on the first 400,000 naira, you will pay 10% rate. Then on the rest, you will pay 20%, and so on and so forth. So you just have to separate the income into those sections, and then you look for the separate rates, just as this example, and then you get when you add them together, you get the total annual payee rate. So you can also try that using the same method, and you can also use different methods. You can use different rates if you like. You can use 30% rate, who knows. So but this is just the algorithm used to solve this kind of questions. So thank you for watching, and see you next episode.